Surprise, surprise, the UK is demanding that the City of London be exempt from the new minimum global tax. Let's do the breakdown. Finance Minister Sunak is out for the big banks in his capital, especially those driving the offshore tax havens. Nobody's answering questions, according to Reuters. The nation's environment minister is talking to the press. He told Sky yesterday that the government wants to engage more fully with the EU on the Northern Ireland Protocol. As you may remember, the European Commission is launching proceedings against the UK for stalling. European equities closed mixed yesterday, the FTSE up 0.25% and the DAX continuing down by about the same. The euro is steady as we get a preliminary reading for Q1's GDP, a 1/3% contraction year-on-year, as employment decreases by 1.8% year-on-year for that same period. Again, better than expected. Meanwhile, in Germany, the ZOO organization delivered 79.8 points for June economic sentiment, missing expectations by 6 points. The Senate yesterday passed a bill increasing fees on mergers. The money gained is supposed to serve the SEC in reviewing these requests more closely, antitrust-wise. While the IRS is making demands of its own, it's just asked Congress for permission to regulate cryptos. The U.S. trade deficit made a welcome retreat to $68.9 billion in April, with Canada marking a $500 million surplus, this after a $3 billion deficit in March, and U.S. job openings hit a record high of $9.3 million, adding a million from March. The Russell led U.S. equities up to the tune of 1%, 12, with the S&P down a tenth as meme stocks continue to surge and bond yields drop. The 10-year, for example, by 0.2 to 1.513%, a one-month low. On the chart, we can see that beautiful spinning top at the end as the Russell tries to breach resistance, and judging by the RSI, it just may. For now, that support at 105 is holding nicely. China is apparently ignoring the U.S. Senate's bill yesterday to boost technological competition against the rising sun. Benchmarks are finally up this morning, except the Hang Seng, which alongside the Nikkei, which lost 0.25%. In China, consumer inflation increased to 1.3%, disappointing investors. But producer inflation in May soared to 9%. According to Zero Hedge, the number is the highest since the Lehman Brothers collapse, and it has officials worried enough to launch price controls. The Aussie is down a tad after consumer sentiment contracted for June by another 5.2%. Yesterday's speech by RBA Assistant Governor Kent has 2.4% inflation target being hit only in 2024. The API yesterday reported a 2 million barrel drawdown, less than the 2.6 expected, but still sufficient to drive WTI across the 70 mark. Reuters is ascribing this to floundering nuke talks with Iran, which is reactivating bomb tech production, and a spiking travel industry, evidenced by more and more traffic congestion, as recorded by GPS. And Aramco is launching its first ever dollar-denominated Islamic bond sale. We're talking 3, 5, and 10-year bills that will enable the company to pay out $75 billion in dividends. As mentioned earlier, spikes in GameStop, Bed Bath & Beyond, and Workhorse are just some of the meme stocks taking off thanks to retail traders and their mobile devices. Boeing is celebrating the 4th month in a row of orders exceeding cancellations, which had become a fashion after the 737 MAX fiasco. And finally, Reuters reports that Sands Casino operation is facing a $12 billion lawsuit from Asian American Entertainment, its ex-partner in Macau, as if Corona weren't enough. A word of congratulations before we go to the global economy. The World Bank yesterday informed us it's expected to grow by 5.6% in 2021, its fastest post-recession recovery in the past 80 years. That's 8.5% for China, 4.4% for the rest of us. Goodbye.